when he is asking a question, how do I analyze an investment? A lot of people think that, I have an investment philosophy. I think I'm too young to have philosophy. You'll find most investors have white hair, right? And they get better with time. And therefore, the quest to learn is a journey and not a destination. So I think rather than saying I have a philosophy, I think I have an investment approach or a thought. The first thing I look at is opportunity. Without opportunities, there can be no economic activity, and without economic activity, there can be no profitability. For example, when I look at Colgate, I look at the present Colgate demand for toothpaste in India and the potentiality for the growth in demand for toothpaste. Infosys became Infosys partly because what Infosys was. But Infosys also became Infosys, but Infosys did not create the internet, or Infosys never foresaw the explosion in the use of information technology. But that was one of the key ingredients and reasons why Infosys, TCS, Wipro and other software companies were successful. Why? Because the opportunity just expanded. Right? So I first look at opportunity. If you look at, when I made a lot of money in a company called Praj, why? Because they used to make ethanol plants. The opportunity for ethanol just went through the roof. So first thing, I look for opportunity. Unfortunately, I think retail is one industry which has one of the highest opportunities in this country. And I call it external. You can do internal things to create demand, but it is too taxing, and that's not the favorite place where I want to invest. I want to invest where demand actually exists. Then this is a very important part of my investment. I invested in Rallis. I made a large investment because I think there is no question that the usage of pesticides and seeds and all of the agricultural inputs has to go to the roof, because you cannot increase food production without increasing productivity. And this is one of the only means of increasing productivity. One of the main means. So the opportunity for Rallis is going to go through the roof. Then I look at competitive ability. In a capitalist society or a free society, you cannot make profit just one opportunity. You got to be competitive, you got to be profitable. Those profits can be driven by technology, they can be driven. I think culture is very important in a company. They can be driven by a culture. They can be driven by barriers which could arise because of maybe taxes, location, capital. So I try and try and understand a company and zero on in its competitive ability or what it already has in relation to the opportunity and the price. Third, what I look at is, my friend said that should I invest in large cap companies or small cap companies? I said, no, Yogesh, we should invest in the small cap companies which will become the large caps. What do you need for that? You need scalability. And believe me, I saw Maruti car, it said, when I grow up, will I be a Mercedes? I think they're prophetic words. How does a small organization grow into a large organization? Right? When I invested in Titan at 500 crores, I made a lot of money, partly because Titan today is 11,000 crore company. And great are the challenges of scaling, capital, ambition. Especially small organizations I've seen, entrepreneurs don't want to give up control. They don't want system, they don't want processes. They still want to work on intuition. Right? So therefore, I think working on intuition up to a point is extremely important. Right? But you've got to have some systems and processes. They don't want to delegate power. Opportunity may be limited. Competitive intensity may be very high. So it is very, very important to judge whether the company will be able to scale. I call it scalability. Then of course I looked for management. And then how do you find out whether you have good management or not? First thing I see is, let's say no in the market, does the market play the market? Does the management play the market? And then in one meeting or two meetings is really difficult to judge. But we investors, I invest in a jewelry company, I invest in a software company, I invest in a hotel company, I invest in a footwear company. Finally, I think we invest out of informed ignorance. We have some information, but that is very limited in relation to what our ignorance is. So finally, we invest out of intuition. So then you have to intuitively feel, and every management carries a reputation. I think that what is also very important is corporate governance. What kind of corporate governance? And I define corporate governance as how the company views all stakeholders, whether society, whether employees, whether shareholders, right? And of course, I believe in investing in a lot of key companies. Why I call them key companies? They should carry two characteristics. Their capital investment and profitability ratio should be low. I mean, they should need very low capital in order to enhance growth, right? And they should buy on credit and sell in cash. I think if a company carries these two characteristics, it has the highest P in the markets. You go to you should take the top 50 Ps in the stock market, price earning ratios. 45 companies will carry this characteristic. And they should be, EVA positive. And last but not the least, sir, what I buy is important. At what price I buy is extremely important. I made a lot of money. In 99, I bought 5% United Breweries and United Spirits for about 6 crores of rupees. If I had held on to that investment, today it would be worth 2,000 crores. And everybody told me, of course I sold at 50, 60 crores. Everybody told me you're buying Vijay Mallya shares, he's a thief, he's this, he's that. Nobody's ever gained from him. But to my common sense, I was getting 55% of the Indian liquor industry, not for a market cap, but for an enterprise value of 200 crores. And for a person who liked to have 4 drinks a day, he knew the value of that money, of that, value. I mean, you can't believe the Indian liquor industry, both beer and whiskey, and every item 55% at an enterprise value of 200 crores. To my common sense, I said, no, I don't want to. So it's important what you buy. A lot of people, Hindustan Liver talked about FMCG. If I tell you, you'll be shocked. In 2001, at the index of 2900, the price of liver was 327. Liver did not exceed that price for 11 years. And the index went from 2900 to 22,000. Liver exceeded that price only in 2012 or 13. So if you had invested in liver for 11 years except dividends, you had no returns when the market had gone up 7-8 times.